So every day I start the day with the Financial Times, FT, Wall Street Journal, Australian Financial Review, Times of London, New York Times, Bloomberg. That's just a handful. I read them all. I start at 6 a.m. But the thing is, you've got to do it every day, because if you stop doing it, then you kind of get out of touch of what's happening in markets. You know, you can have like a broad overview, but you don't know the specifics.
Right, folks, here we are in Trading Up. We've got a little bit of a different kind of episode for you folks out there. Now, I've brought on probably an unfamiliar face. It's Eden Bradfield from Black Bull Markets. Now, the reason I brought him on is because I've been reading his newsletter recently, and it is absolutely phenomenal. I got onto it primarily because I'm a Black Bull customer, but also because the guys at Black Bull, when I met with them, they said, have you actually been reading that newsletter? I said, oh, I'll skim read it. But then I dove in, read the full thing after they just raved about it and said, this guy is some kind of savant. And here we are. I've now got him on the show and I'm sharing him with you guys. So you can thank me for that later. Welcome to the show, Eden.
Yeah, thanks, Cam. Thanks for having me.
Well, look, as I said, look, you know, some of the stuff that you've got in this newsletter, it is an email newsletter, comes out maybe twice a week?
Twice a week, 3 times a week, you know.
3 times a week. Okay. And it is jam-packed full of not just sort of like rhetoric around the market, but actually actionable stuff that people could, you know, take on board as part of their common sense approach to either investing or trading. So what I want to do to start off with, just to I suppose fill in the blanks for anyone that doesn't know you, and I don't know you that well either. So I'm interested to find out how you got to where you are now, where you're able to write this newsletter and talk on, you know, stocks, currencies, global macro, all this stuff, and have such a I suppose easy way to distill it down for the layman on the street.
Yeah, sure. I mean, look, I think if you really understand something, you should be able to distill it like down to just basic nuts and bolts. You know, I just really don't think talking about finance, whatever, it doesn't need to be complicated. You know, if you can simplify it, if you really understand it, then you can make it accessible to, you know, the guy on the street, like your mum, your grandma. You know. Like, I always have this thing like in my head, like the grandma test. Like, would my nana, who doesn't read the newsletter, if I gave it to her, would she understand what the hell I'm talking about? And I hope most of the time, you know, it is. But look, I mean, I think people are like compounding machines, you know. The more you read about this stuff, the more you learn about it, the more you kind of retain. And I've just done that over the years. So, you know, I can't recommend doing what I do. Yeah.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
And can you give us an idea about what kind of stuff you read and how often you'll actually sort of, you know, soaking this information in?
Every day. So every day I start the day with the Financial Times, FT, Wall Street Journal, Australian Financial Review, Times of London, New York Times, Bloomberg. That's just a handful. I read them all. I start at 6 a.m. So,
and how long does it take you to get through the lot of them? And are you reading them from cover to cover, or?
Oh, look, I mean, there's always stuff you skim, and there's stuff that you really are interested in, you know, specific situations, but probably a couple of hours, I don't know. But the thing is, you've got to do it every day, because if you stop doing it, then you kind of get out of touch of what's happening in markets. You know, you can have like a broad overview, but you don't know the specifics. So it's kind of like practice. Like if you get out of practice, you know, you go on holiday or whatever, then you kind of drop the ball. It's hard to get back in.
Right. And so, okay, that's part one, is like, how do you get that information? Now, the part two of it is probably how do you distill it down to actionable insights that you can sort of take yourself?
Yeah. Do you know Stanley Druckenmiller, the great investor, worked for George Soros in the 80s and the 90s. Is an amazing investor, and he started his his career working at this firm in like middle of nowhere, and he was like in his 20s, and he was given a role as portfolio manager, and he was like, why do I have this role as portfolio manager? And his boss is like, well, you're so young that you're still stupid enough to make good decisions.
Right.
He's like still ready for risk. But anyway, he tells the story about writing this massive report about a chemical company. There's 50 pages or whatever, and his boss is just like throws it in the bin. He's like, Stanley, what's the point of that? All I want to know is what makes the stock go up or what makes the stock go down. So when I'm looking at these situations, things like Starbucks or Nike or Reserve Bank decisions, like all I'm thinking about, what's the catalyst? What's going to make it go up or what's going to make it go down? That's the only question I really have.
Right. Okay. So by looking at that, you go, okay, that's going to make it go up. That's going to make it go down. So therefore, I'm long this, short that. Bang. There you go. Bob's your uncle.
Yeah. 100%.
And then I suppose what you're doing is distilling that down even further into this newsletter, which is a very easy read. It is like written not like the Financial Times, not like the Wall Street Journal. It is very much a layman's, man on the street chatting with a mate way to understand what's going on and what things you should be looking at. Look, we're going to dive in and have a chat about some of the current things that are going on. Nothing that people are going to be able to take away from a major point of view today, but it's going to give them an insight into like the kind of stuff you're looking at from a stock point of view. Then we're going to have a look at currencies, and then we'll have a look at global macro. So that will probably be the most interesting thing I'm thinking with like what is the sort of future forecast for anyone looking to invest into the S&P 500 at this point in time and that kind of thing. So to start off with, let's dive into some stocks that you're looking at and some interesting things around there.
Yeah, sure. Shall we talk about Starbucks, right?
Yes, talk about Starbucks. Everyone knows Starbucks.
Starbucks. The stock went up overnight 25%, added $20 billion to the market cap. Why was that? Well, the CEO, the old CEO, this guy called Laxman, who came from Reckitt Beckneiser, which they make like things like like household products, Nurofen, stuff like that. He wasn't the right CEO for the job. He's out. He's on the street. He's gone, right? And now we've got this guy called Brian Nichols, who comes from Chipotle, which has been a fantastic company in the States. Like, since he's been CEO, profit's gone up 600% since 2018. Yeah, for real. So the market, here's what makes the stock go up or down. The market loved that. And you look at the candle on that thing and it's just to buy, So that's a really interesting situation because like Starbucks for a long time was a great company, and then a few things happened. In China, the Chinese got sort of more canny with competing against it. There's another chain called Luckin Coffee, and then other things like in the States, they just kind of lost that sparkle of what made Starbucks. They sort of gave in to like useless middle management, stuff like that. And that's kind of made the stock plateau. So, it's trading like $94 or so at the moment. It was trading at $74.
Right. Okay.
Yeah.
And is that an all-time high, or is it kind of like it's got plenty of room to go?
No, it's not an all-time high, but I think it's a sign of confidence that the market has with having this Chipotle guy in there. And remember, he came in, he became CEO of Chipotle in 2018 when they had that whole norovirus scandal. I don't know if you remember that. But
no. Oh, actually, no. I do. Yeah. I do vaguely remember getting sick after eating Chipotle in the UK. So I thought it wasn't connected. Hopefully, it wasn't.
Yeah. So like they were completely toxic at that point, and so he turned it around from being like this toxic company that no one wanted to have anything to do with to being what it is now. 600% growth in profit. Revenue just at record highs. So that's kind of what you want with someone heading up like a turnaround like Starbucks.
So with that in mind, it's like obviously Starbucks looks like a good sort of, I suppose, prospect for someone looking to add it to their portfolio or something like that. No investment advice here at all, but that kind of thing gives the impetus that maybe, if you're looking for a retracement on the stock, then you might want to get in, that kind of thing. Yeah.
Yeah. And like what I'm always saying in the newsletter is, and this is what an old boss of mine used to, tell me, sometimes yell at me. It's like, you make all your money in the buying, and it's true. Like if you picked up, and we had some Starbucks for clients at $74 a share, right? So we're very happy. But you make all your money in your buying. You make all your money in buying these situations where it's trading at like a 5-year low. You look at the TA on it, it looks like trash, and you go, okay, what is going to make the stock go up? What's the likelihood of a turnaround? And then you have these days where the stock adds 20 billion to the market cap, and you go, booyah, you're happy.
Yeah. And what about, okay, so that's Starbucks. What about Nike?
Do you wear Nikes, Cam?
I don't anymore. I don't. I've got the widest feet in the world, and they just don't fit my feet. I'm lucky to get into Adidas these days. It's. I mean, my feet are just terrible. So I'm now kind of more New Balance, in all honesty.
I reckon a lot of people are New Balance now. Honestly, like
I
see
think their branding
well-dressed
is
people.
Yeah,
it's their branding, and they're privately owned as well. But that's kind of the issue, right? Like. You go to the man on the street and you say, "Are you wearing Nike?" And they're like, nah. And like, think about how crazy that is. Like in the 90s, you had all those great commercials with like Michael Jordan, like talking about failure and stuff, and like it was the thing. It's not the thing anymore. And that happened for a lot of reasons. They got consultants like McKinsey on who were like, "Well, let's cut costs and move divisions around." It doesn't work, like. You've got to remember, like, when you buy, like, a brand like Nike or Adidas or New Balance, you're not buying a product, you're buying an idea. And they kind of lost track of that. So, again, like, it's one of those stocks that's basically trading around, like, a 5-year low, which I like to go into stocks at 5-year lows if it's a good stock. Because you can kind of often be sure of, like, reversion to the mean, right? Like, a retracement back to where it should be. And that's just on like a pure technical level. But then if you think about Nike, well, Bill Ackman, one of the world's greatest investors, definitely one of the loudest investors in the world, he just bought about $230 million worth of Nike stock.
Right.
There's
a sign.
Yeah, there's a sign. So he's smarter than me, a lot richer than me. So, you kind of think, well, okay, he's either going to go activist and actually go into the boardroom and tell them what's what, or he just sees a turnaround happening. It could be one or the other. So that's sort of another interesting situation,
It's it was funny you talk about Nike. I mean, I went to the UK, Europe earlier this year, and I actually went up to Auckland where you guys are, and I was looking at Nike in all of different places, and I'm like, damn, why is it so expensive now? It never used to be the sort of like most expensive out of all the brands, that sportswear brands you could get, and now it's kind of like it's felt like 25% more expensive on everything. So that and whether or not that's sort of detrimental to it, I'm not too sure. The other thing I was going to talk about was the whole footwear industry. Now we're completely going off a different tangent here, but I mean, if you look online, you've got all these, like, as I mentioned, wide feet for me. You've got all these sort of like what are they called, like sort of barefoot shoes, right?
Yeah.
And not one of the main shoe manufacturers have gone into that space. And the biggest problem with these barefoot shoes is you can never try them on because you've got to buy them online. So that if there's not an opportunity there for a Nike, an Adidas, or whatever, I don't know. What are your views on that?
You gotta think that they must have had looked into it. Surely,
Surely.
These massive companies,
Yeah.
It's interesting you say that because you actually see some of the like upstart brands. Like, have you heard of On Running?
No, I haven't heard of that.
They're owned by Roger Federer, has a big chunk in it.
Oh, okay.
The tennis dude, and they've quickly become like the tennis shoe that all the tennis dudes are wearing.
Right.
I think that just speaks to how quickly the industry moves, right? Like you can have Adidas one day or Nike one day, but if you get like a disruptor in the area that actually is making some good stuff, like on running, that Roger Federer owns a bit of, then you can see how quickly that can disrupt as well. I guess same with the barefoot shoes. I don't know what's happening there. It's interesting.
Yeah, it is interesting. I just, it's one of my sort of, it's a bugbear because I want to try them on because I've actually bought some online and they're, either a bit small in different areas. Like I'm completely going off on a tangent here, but I think if one of these major manufacturers or even one of the barefoot manufacturers could just get it into retail outlets, they would see things go crazy good. Anyway, Shell, any other stocks of interest at the moment that you want to talk about?
What's good? What's interesting? The other thing that's interesting that I've been looking at a bit is things like UMG, Universal Music Group.
Yeah. I was going to talk about I was going to mention that.
Yeah. There's only 3 major record labels in the world that control basically all the music. So UMG, there's Sony, and there's Warner Music Group. That's kind of it. So it's almost a monopoly, but not quite. And UMG, they've seen some incursions from streaming, just lower revenues, and they've been in this big fight with TikTok over commissions and royalties and so on that platform. So the stock fell from, I think, don't quote me on this, but I think around €28 down to €21 after earnings. So I picked up some of that for myself because again, they have 30% of the streaming market in music.
Yeah.
And they're not a middleman like Spotify. Yeah. If you're Spotify, you're kind of at their whim. They can just go, actually, we don't like you anymore, Spotify. We're going to take our toys elsewhere.
Because I read that newsletter that you sent out. It must have been a few weeks ago now. Because I actually bought in as well after reading that. Because it was one of these things. I don't really look at stocks. I only started starting to look at them in more detail, and then I was like, okay, well, let's put some technical analysis against it with what I know. And then I'm like, oh, geez, things bouncing off a trend line after that massive drop with a huge gap.
It's tasty.
Which was like, and then plus the common sense stuff that you'd written about around, they can just turn off Spotify kind of thing. And the royalties they've got, it was just like, this is a no-brainer. Why wouldn't I get in on this stock I'd never heard of before until I read it in your newsletter? So, that's another interesting one. And there's stuff like this that I think's great to get the audience, make them aware of these things that they potentially are missing out on because it's a no-brainer. Like I saw a YouTube video yesterday where somebody was asking, I'm dollar cost averaging into the S&P, and it's at all time. It's at all time highs. Should I wait for it to drop a bit further and dollar cost a bit later, and will I miss out, and all this sort of stuff, confusion. Whereas I think with what I'm reading in your newsletter, it kind of clarifies some of that stuff for people that may be a little bit confused or on the edge. Let's dive into the Forex side of things, because I know a lot of guys trade Forex. Listen to this. So we had the New Zealand interest rate announcement yesterday, obviously quite critical to you and me living here, but anyone trading the NZ dollar pairs as well. What were your thoughts on that, and how did you go?
Well, we call in the newsletter, we called that they'd cut, so therefore you should short NZD. Whatever pair you prefer doing. Obviously we prefer ones with the biggest skew, but so obviously the RBNZ, they cut by 25 basis points. So we were happy. We made some money there. But again, I just like no-brainer things, Kim. I'm not a high frequency trader or anything like that. So it was just well, look at New Zealand CPI. New Zealand CPI, it's within that 1 to 3% band. And then I don't know if you've been around in the cities much lately or whatever, but you look around and places are closing left, right, and centre. Restaurants are empty. If you're a reserve bank, you've got really crude levers. You can either print more money or you can raise interest rates or lower them. That's sort of it. So if you're Adrian Orr and you're sitting as the governor of the Reserve Bank of New Zealand, and you're seeing this economic situation play out, especially with housing, especially with people paying just most of their income on their mortgages or whatever, you're going to have to think, okay, maybe it's time to cut. And 25 basis points, it actually doesn't do a lot in terms of monetary policy. It's psychological.
Yeah.
It's like a head game, you know.
Yeah, and he had a lot of his rhetoric was sort of, just not fact based kind of stuff with what he was saying as well. It was, just fuzzy kind of let's just put the wool over your eyes. We've dropped it, makes you feel good. Away you go.
Yeah. It's just fuzzy wuzzies. Well, there wasn't a lot of facts there, you know.
Yeah. Yeah, what about other currencies or other countries? I mean, have you got a good? Are you able to do the same thing with like let's call it a euro, and working out whether or not, because that's obviously quite a difficult one to call. There's so many countries involved.
Look, the eurozone is so difficult just because you're not dealing with one country. You're dealing with a whole block, you know. Whereas something like one interesting trade we're actually sort of in the process of unwinding at the moment is the peso yen trade. Why peso yen? Because it's got the biggest skew versus USD, so you can make more money. You can also lose more money. And holy heck, that's been an interesting one. We bought into it at the Mexican elections happened. And the peso, I don't know if you saw that, took a massive dump because the new president or whatever is a socialist. But, you know, you say socialist, but not really, you know. So we got the peso like at a relative low, which was cool. And then you're basically going up against like Japan's monetary policy, which, as I'm sure you know, is just completely bonkers.
Yeah.
So that's done really well, but we're unwinding it now, you know.
Now, there's a pair that I don't think I've heard anyone place a trade on, and if not ever, I don't think I've ever heard anyone place a trade on it. In all honesty, okay, so it does become quite more difficult, but then there are opportunities that you see, which is fantastic, and I'll be looking out for more that you've chuck in here because I mean that New Zealand rate thing, I got caught on the wrong side of it. And even though I read your newsletter, I'd kind of forgotten what you'd said. And I was like, oh, no, the technicals are saying this. I'll ignore the fact that it's fundamentals and I'll kind of think I should be all right. There's so many technical levels here to break. It's not going to break them. What do you know? It broke a lot of them. Anyway, global macro, where are we at? What are your sort of insights into where you think things are going to go in the next year?
Look, I think if anyone doesn't think we're heading towards a recession, they need to get their head checked, you know.
And you're talking a global recession, yeah? Global recession.
Yeah. I mean, major countries, US, right? You know, UK for sure. UK is pretty in a bad situation, especially post Brexit, post a million different prime ministers under the Tories, you know. But you know, like the US has shown really strong, a really strong economy recently, which has been interesting. But you are starting to see weakness now. You're seeing weakness in Starbucks. You're seeing weakness in McDonald's. McDonald's just had flat sales for the first time in like 10 years. You know, so you're seeing weakness in all these kind of consumer names, which, to me, that's the canary in the coal mine. You know, if people aren't going out to buy like a $5 cheeseburger and chips or whatever, or they're not going to buy Starbucks, they're not buying shoes, they're not going to, you know, movies as much. All this kind of data that you get fed in, and also remember there's freight data as well, right? So you look at the trucking companies and see how much shit they're shipping around. If that goes down, where you go, okay, we've got a problem, and that's where I see the world headed, to be honest with you.
Right. So it's not looking great. So let's go S&P 500. S&P 500. What do you? Because that's obviously, you know, the top 500 companies of the US. You know, they rejig them based on, you know, what companies are doing well. So it's always gone up. It's always gone up forever and a day. I mean, do you see a humongous kind of retracement on that, or blip, or is that probably unlikely?
I'm not Peter Schiff, but
can't be worse than COVID, can it? I mean, like, can't be worse than that.
I mean, here's my major area of concern, Cam. If you look at the S&P 500, most of those gains this year or so are from the Magnificent Seven. They're from Tesla.
Yeah.
They're from Apple. They're from the companies like that. If you strip those companies out, the S&P's gained like 4%, like nothing.
Right.
So that weighting of those companies in the index is the heaviest it's been since 1965. And there's a great chart, and it's kind of like this, So there's a massive, massive reliance in the S&P on these companies, right? And that's the risk. It's not a wonderful pie of 500 companies. It's a pie with a whole lot of meat from 7 companies and then some bits of gravy and so on.
Right. Yeah.
And that's a real risk,
Yeah.
Why is it a risk? Well, CapEx, capital expenditure, on tech companies used to be like nothing. Your Google, cool. You run some servers, you run an algorithm, but you make most of your money from marketing, from AdWords. Cool. Happy days. Now we've got AI. We've got NVIDIA. We've got chips. We've got data centers. They all need energy. They all need space. They all need cost, right? So if you're competing in a tech space, you've got to have massive data centers that consume a shit ton of energy that have to be operated. So the capital expenditures of these companies look more like what oil companies used to, be in terms of outlays. So there's a lot of things like that have been quite a rapid shift in the last 5 years or so.
Yeah. Okay. So that is a really interesting way to look at it. I don't think I've never heard that before in my life. So I did hear the McDonald's thing though, and I was trying to think, where did I hear the McDonald's thing? Oh, because I read it in your newsletter. That's where I heard it from.
Yeah, I mean,
now I want to ask you a question around, and this is kind of off topic. So this is the end of the interview.
Yeah.
You seem like a guy who knows an awful lot, right, and has got a good grasp on probably, giving some predictions on the future. What are your thoughts on AI, just in general, not necessarily financially, about the companies that are? What are your just thoughts on it?
Man, have you played with ChatGPT much, or?
Yeah.
It's good. It's great for some things, but it's it gets like diluted sometimes. Like you'll be telling it to, for instance, I've tried to make it do like a regression analysis of like alcohol trends in the world.
Right.
So I fed it all this data, and it just couldn't spit out anything correct, And I think, I don't know, it feels a bit hypey to me,
Right. Okay. So yeah. Okay. I see what you mean. I know that they've. I think it was. I don't know if it was them or someone else that had added memory into their. I think it was ChatGPT had added memory into their AI now, so that you could talk to it and it would remember stuff, which I think was a big issue back in the day. Was it just never remembered anything you'd already talked about, and it kind of went back to the square one again. And you're like, oh, did you not remember that? Whereas whether or not that's going to fix things, I don't know. But I kind of know what you mean.
I mean, on one hand, look, AI is exciting, and I think it will help automate a bunch of things like coding and sort of manual sort of data work. On the other hand, I think it emphasizes how important creativity, the arts, humanity is. AI can't create that. It's a tool, and we can use it as a tool for whatever we want, just like we've used the internet, just like we've used digital cameras rather than film, just like we used radio back in the day. But, I mean, to sort of go on a tangent, bubbles are important. I think AI is a bubble, but that's not a bad thing. And I'll tell you what I mean. In the 1800s, there's a railway bubble, right, in the UK. There's hundreds and hundreds of railway companies listed on the stock exchange. And the stock, went crazy to the moon and then crashed again. But in that time, the UK and Europe got covered in railways that went from, all the way from the north of England to the south. So it was actually a massive rollout of technology. It did come at the expense of capital, but that's what happens with a bubble. Same thing with the dot-com bubble. Same thing with there's a telecommunications bubble. Same thing with all these bubbles. And I think the same thing with AI. All this capital is going to flow into it. Most people are going to lose money. That's the truth. But in that time, we're building virtual railways, if you like. We're building virtual tracks across the world that I think will be really important to the future. So I think that's where I see AI going. Yeah.
Now, if you're loving the show and thinking, where can I go and trade? Why don't you check out my prop firm sponsor, Blue Guardian. Now, these guys have been around for ages. They've been sponsoring Trading Up for over a year. And some of the key features that make them so good is that they've got realistic profit targets. For their challenge phases, it's only 8 or 4%. They also have a scaling plan up to $2 million. And they do profit splits of 85%, which is really high for this industry. They also have quick and reliable payouts and a robust reserve that make sure those payouts are as seamless and smooth as possible. Now, if you're looking to join, go and check them out. But first, grab my coupon code TradingNut, all one word. You're going to save yourself 25% off at checkout. There's a link in the description. Go and click that now. Right, let's get back on with the show.
That's a nice way to put it. Absolutely love it. Now, Eden, really appreciate you coming on. Now, folks, if you've got if you've got questions for Eden, then I'd recommend chucking them in the comments here. And if you want to see this guy back on the show, put a yes or whatever in the comments as well, because I think we could probably get you on here maybe every few months and just see what you got to say about the world and the state of things. And if you do want to get the insight straight from the horse's mouth straight away, then there's that Black Bull newsletter, which we'll hook a link up to that below as well. And I believe it was completely free before, and I think you guys have started. It's completely
free for now, yeah.
Oh, it's completely free for now. Okay, it's right. Yeah. So guys, just check it out. It's completely free. Go and grab yourself a copy of that. It'll get on the list. It's absolutely awesome. So, what's the best way if somebody does want to reach out to you? What's the best way for them to do so if that's what you want?
Just email, research@blackpool.com.
Okay, brilliant, folks. That's what you need to do. Well, look, Eden, thank you very much for coming on the show. Really appreciate it. No, it was very different for the audience out there from what I usually do. If you like it, give it a thumbs up, and we'll see you in the next video.
Cool.